All right, everybody, good morning. Happy Wednesday from the Baltics. Hope everyone is doing well in Europe, my European friends. Going to continue our English language live streams of American markets at the moment. I need to get some more European markets on my trendline analysis, and I will. So many things to do, but for now, just want to update a little bit more on the broader trends, continuing the conversations that I have been having with myself and you commentators over the last few days. Commentators. Let me put up a chart. Okay, so this is my headline. My headline figure, as usual. Do I even have that updated to the fullest? Yeah, I do. Here was the 2024 year-end number. And if we zoom in, all right, this is my headline research. You're not going to find it as clean anywhere else on the internet. This is dollar valuations of all central bank money in the world. Most all. And a really remarkable trend here is that we've dipped below the 2.5 percentile on a multiple basis, okay? So that means wherever this green line or green shaded area is around the trend line, that creates a multiple over time. And I'm showing you two different things. I'm showing you how it evolves, and then it will, of course, continue on into the future in a nice straight line. And then I'm showing you the all-time trend, okay, so we can compare. So what happened here, obviously, as data just gets added to this set more and more, it's a little bit more lumpy, but you can see it generally, it's growing at a constant rate. And then we put the all-time trend in, and we can kind of see where we shift to. And then we need to interpret this, okay? So we're making a move right now that's very similar, all right, since the top of the COVID money printing, which remember we got up to $30 trillion of monetary base. $30 trillion. We're making a move that's something like here in 1980, after the stagflation periods of the 70s. Paul Volcker took interest rates to 15% on the short term. Long bonds even went up to 20%. And then the money supply in dollar terms sort of petered out at this point after this interest rate peak. Okay, so it went from something like 600 billion. It's a pretty wild number to think about, right? In December 1980, 600 billion as interest rates were topping worldwide. And this, again, these were millennial high rates going to 20% on base government bonds, topping at 600 billion, and then really sort of staying sideways. But compared to the trend, that was like kind of like a downward motion, right? So let's go back to the beginning of this data set, growing pretty quickly. And to be honest, this is a little bit of artwork as well, because it's just not possible to get all the same currencies at the beginning of this data set compared with the latter end. Nonetheless, the ones that are usually added are pretty small, and I have China now included in this data set, their physical currency, going back to the beginning. So this thing has been improved over time, and it's as good as we're going to get for global money. But we're growing at this clip, and we can see even what the all-time trend is here. But we're growing even a little bit faster than the all-time trend. That is, we're above it, the red lines, all right, the multiples of where just where the green line generally is, okay? And then we peter out here. We go a little bit sideways, right? Until the mid 80s, then we go up again. Seems like we're doing something like that now. This period, by the way, it was 5 years, and from 80 to 85, the global monetary base topped out here in 2021 at 30 trillion. Now it's even down in dollar terms, and it's been 4 years. It's been 3 full years, but we're into the 4th year. And if you put the all-time trend, we can sort of see where this general picture is. And let me take off these bands because sometimes they can even confuse it. And you just see this is it. This is the trend. And there's a lot happening here. I know I repeat myself a lot, but I want to do it just for any new listeners. You're seeing 2 things here, actually. You're seeing the growth of native currencies. All right, so this is an increase in Japanese yen that the central bank prints in Japan, the BOJ. You're seeing the PBOK increase, Chinese yuan. You're seeing euros till 1999. And then before 1999, you see the 3 largest. I don't have all the euro countries, but these are the largest. You see the French franc, Deutsche Mark, and Italian lira. You're seeing dollars, of course. And you're seeing, by the end here, 50 other currencies. So that's one thing. But then you have to do a conversion to make this make any sense, right? We have to, I could just show a random axis of just random things growing, but it'd be very hard to understand, very hard to interpret, right? And when I say random things, I mean 50 different currencies growing up the axis. That would be more difficult. So I have to put it into a numeraire, which in this case is dollars. So then there's the second thing that is happening, and that's harder to see. And I haven't sort of other than telling you, I haven't, found the best way to show this yet. I have shown this interpretation in a few different charts, but let's just talk about it today. 30 trillion falls to 25.5 trillion over 3 full years. That is a over 16% drop, 16%. But that's in dollar terms when you put all those currencies in dollars. In fact, other central banks, the other non-dollar denominated central bank currencies, continue to inflate or were kind of flat. In fact, it's close to flat, a little bit under, all right, in terms of their native units. But still, when you put it into dollars, that's a 16% drop. What I'm telling you is it's not really a 16% drop, it's less. It's more like 2 or 3% in native terms over 3 years. So that's what happened. And then the question will become, if we want to look into the future, how much longer can this continue if just this is the general trend? And if we see hardship, which usually a central bank responds to hardship by papering over things, how much longer can this continue to do this post-pandemic alleviation of any pain? Sorry, not alleviation, but normalization. The alleviation was here during the pandemic. Lots of liquidity, lots of free money for corporates and individuals. It's a worldwide figure, but now it's 16% lower. So there's 2 things happening, all right? And the headline numbers that I always come up with are, if you can imagine all of these different currencies, yen, yuan, sterling, Swiss franc, dollars, all of those on a weighted average seem to grow at about, they do grow at 12.7% per year compounded, 12.7% per year compounded. It's about 1% per month. I talked about that yesterday. But if you do what I did here and put it in dollars, and then do the trend line analysis, and let me just pull it up to make exactly sure. you're going to get a number. Yeah, that's about 2.5 percentage points lower. All right, so the slope of this black line is not 12.7%, my headline monetary inflation number that I've produced since 2018. It's actually 10.2%. So that right there, that in and of itself tells you something interesting about non-dollar currencies. Okay, so all the currencies on weighted average do 12.7%. But then if you transform all those currencies into dollars, run a trend line on that, it's 10.2%. And that means that all other currencies lose 2.5% per year on average compounded compared to the dollar, which is pretty interesting. So this is a 10.2% slope of the curve since 1969, basically since the end of the gold standard in any shape or form. Now let's look at, does that have GDP? Yeah, let's look at GDP over the same time period. Okay. This is an interesting one. America is continuing on the ascendancy as we move into a dollar, away from a fully gold or partial gold to a fully dollar standard. All right. You can see that the trend line is in an upward trajectory here. And then from the end of globalization, or not the end of globalization, but from the waning days of America cooperating with the world, Gulf, Iraq, second Iraq War, of course, here, Afghanistan, GDP actually falls in dollar terms. It's growing, but the slope of the curve is not as steep. All right, and then we have this kink up again because of so much money printing. And again, here as well, you see growth of final goods sold in America, but you're also getting a little bit of that money print because the dollar is the world's reserve currency. And because of that status, other nations want to hold dollars. So it still grows a little bit higher here. And then we can put the lifetime trend here. 97% R squared. Pretty good. But we can clearly see there's a distinct hump, a hog's back, if you will, to where we rise above this all-time trend all the way until the global financial crisis. Then we fall below it. And we've been below it ever since. Even with this COVID bump, still below it. BTC for plebes. They lose 2.5% compared to the dollar, yes. Yes, a dollar milkshake theory is another way of saying that. Let's go back here. All right. You know, I can't draw for you the curve, but again, it's 12.7% is the global average of all currencies, weighted. But this is only 10.2 when you actually just measure the dollar itself. That is the dollar equivalent value of all currencies. So this is very helpful in my opinion. I've gone through numbers like nobody when it comes to some of these central bank balance sheets, and I really do think that this will give you that's an interesting hint into the future. So it shows that still the dollar has dominance. Dollar still remains the best looking horse in the glue factory. All right. And the question is going to be for how much longer? All right, so GDP though, let's look at GDP now. What's the slope of this black line? All right, just the straight up slope of the trend. It is 5.9% since 1969. GDP growth, 5.9%. I think Biden handed over to Trump here with something like, let's just do the math to show you, okay? I'm going to do the math exactly on my little trusty calculator. 29.21 divided by, let's go to December 2023. 27.37. Wait, did I read that correctly? Sometimes 27.73. Yeah, 5.3, 5.4. I've seen different numbers. So Biden handed, I'm not a Biden fan by any stretch of the imagination, but he did hand it over with some good money printing to Trump at a 5.4% annual rate, and economists now are projecting 0 for the next year. It is what it is. The bigger question, again, regardless of the tariffs, of America's prowess in the world and how much people trust America, what if we never go back above this trend for another 50 years? Something to think about. Cillian says Biden was great. Maybe some people thought so. We've been under this trend since the global financial crisis. So that's an interesting trend right there, GDP. All right, let's look at stocks. This one I stretched back a little bit further. Maybe I should have kept it the same 1969 time period. Whatever. They're close. They are different, but let's look at the slope of the trend here. Let's take off the all-time. A lot of stock market crashes. The 60s. Stagflation, some big ones in the 70s. Finally, we get out of the 70s. We get on the petrodollar more. Agreements with the Saudis. Grow faster. And then right here, the start of the World Wide Web, we boom. We boom to the pets.com mania, all right, in 2000. People were talking about like $40,000. I think it was 40,000 Dow at the time. That was 10, maybe. Let's pull it up on TradingView. You know, we're finally getting to that number with the Dow. Big crash here. .com. Print again. Alan Greenspan, the maestro, takes interest rates to all-time lows. Crash again. Print again, and here we are. Okay. 6,000 S&P. This is as of December, a little bit lower, as you know, from the Liberation Days. But I'm only taking this through December 2024. Slope of this curve. It's about 7%, 7.3%. Okay, let's take this off. Let's just look at the broad general slope of this curve. 7.3% per year. Above trend. Kind of scary. I'm not saying that we have to revert to the mean by any means, by any stretch of the imagination, but there's very little history in the stock market where these sort of mean extending runs can last. It's just typically how exponential growth works. Usually there's a bust. No matter who you want to blame it on, the central bank, whatever, it's just what happens. So be prepared for that. Cillian says he showed us that the president doesn't need a pulse. Correct. All right, so we're above, had a little COVID push and then crash and then up again. Even amidst actually, there's no money printing in this point, have not been printing money. Worldwide we have, but in the U.S. we haven't, and we're still booming again. So we'll see how much longer that lasts, especially with the new tariff regime. But well above the mean. Not quite to the sort of 2 sigma number by any stretch of the imagination, but that's a big buffer based on history. We did go above that and really pull it above in the late 90s. All right, so that's stocks. And now here's another one. This is stocks with dividends. Unfortunately, I only have this from 88. The slope of the curve will be enough to show us. So it's what you call a total return S&P. The value of that at the moment is actually at an all-time high. So what this is saying is if you reinvested with dividends, this would be the value of your investment. And see, that's 13,260, whereas the S&P itself is only 6,000. So reinvesting dividends is a powerful force. Let's put the all-time trend in. And there we are. The slope of this curve now is interesting. This is about 2 percentage points higher. And these numbers have changed, depending on the frequency that you choose, the variation. But I think roughly it's safe to say over the long run, the S&P has given investors 7%. It's actually trending higher now because of this move. Like these pumps have pulled it even higher. If you looked at just say, especially if you looked at it from here, the nadir in 2020, or actually not even there, here. If you looked at it from here at 666, which it hit in March 29, which I'm not catching here, but it did hit 666. If you look at that trend all the way to this trend, you get a way steeper black line. So that could be over 12%. So again, it depends on your frequency. But over the long term, 7% for the stock market. Oh, sorry, this is total return. I keep saying, yeah. Over the long term, 7% for the regular market. But then if you reinvest those dividends, that turns out to give you an extra 2 percentage points. So this is 9 or 9.3%, the slope of this black line. Cillian asked about a super chat. I don't think it's active for my channel. I don't know. This is I'm streaming on a bunch of different platforms, so I don't know. But if you want to donate some BTC or some over Lightning or anything, please, by all means, my BTC Pay server is available. Thank you. All right, so now we have Bitcoin. As always, this is not an exponential curve. Unlike stocks with dividends, unlike stocks without dividends, unlike GDP, unlike money, these all grow in straight lines on log scale. Straight line, straight line, straight line, straight line. Straight line. Exponential. This is a nicely slowly declining rate of growth, slowly asymptotic power curve. And we can't, because it's a power curve, because this is faster at the beginning and slower towards the end, I can't give you actually a constant number. With these charts, I can give you a constant number, 10.2% per year, compounded in dollar terms. 5.9% per year, compounded in dollar terms. It doesn't matter where you pick. If you pick any point on this curve, let's even take this off, and you just invest anywhere here, the return will always be 5.9% per year. Now, of course, in reality, that's not the case. We were faster here, slower here. But the curve itself is constant. That's exponential growth. Here, it's not constant. It's an important point. Bitcoin is not constant. But do not let that scare you. Do not let that intimidate you or make you think that Bitcoin isn't a good asset to park your wealth, because the slope of the curve here is still enormous. Let's take off the bounds. Even though Bitcoin is volatile, how many Bitcoin obituaries did we see here, especially right here, coming off of the 2017 top? But all the time, right? All the time we see people saying Bitcoin's failing, continues to fail upward. The slope of this curve declines over time. And now the slope of the curve right here is about 45% per year. We're moving down to about 42% per year. That's where we're moving. So to recap again, 10.2% per year, money, 5.9% per year GDP, and not looking to repeat, in my opinion, anytime soon, especially with tariff policy. Not looking to repeat that rate of growth, maybe for decades. 5.9% per year. Stocks, 7%, 7.3% per year. Stocks with dividends reinvested. That means you take your dividends, you put it right back into the market, buy more. 9.3% per year. Bitcoin, declining from hundreds of a percent per year on the curve, even thousands of percent if you pick any point. Hundreds of percent a year down to 45 and 42. And if you're wondering if it would reach anything like, 10%, when is that projected? Because we can easily project out. It's not for 100 years. So these are gargantuan returns for Bitcoin, and these are gargantuan predicted returns for Bitcoin, even though it's a declining rate of return. Good morning, Kevin. Hi, Cillian. Thank you. Yes. If you go to my website here, just go to my website and you can, on the very bottom of the page, you can find my BTC Pay server. You can donate in Lightning as well. Thank you. All right, so that's the beauty of the Bitcoin trend. And we're actually right in the middle. Talked about this a lot yesterday. We're like, 60th percentile. Something like that. Between 50th and 60th percentile. All right, so now if we take a look back here at stocks, this is 6 months on the S&P. Liberation Day, down from Liberation Day. Yield recovered. Interesting. Remember, we've talked a lot about this. This was the scary, scary, scary time for Besant. Recovered so far. Okay, so we're flat from Liberation Day. That's a sign of relief for the Treasury. How long that lasts, if it lasts, maybe it lasts. Of course, I don't know that, but this is the main sign for the dollar. One of the main signs. The other main sign, of course, is dollar-euro. Down from Liberation Day. Liberation Day is here. 108. We're now at 113. And that's a number we haven't seen since... Did we even see it? Yeah, we didn't see it in the last year. You got to go somewhere back to 2022 to see the dollar-euro at this price. BTC for Plebe says only on-chain. There might be a mistake. Let me check it for you. We can do it right now. There's my BTC Pay right there. And I'm going to be curious myself. Let me pull this up while I don't know why it's going slow. Fantastic. I'll have to check it. I can't even get it to load. It's the beauty of Bitcoin. I got to look at the liquidity on my node. There should be an option, though. If you can connect, it should be an option to do Lightning. At least there definitely was in the past, and I have it set up to my node. So, all right. Another option, by the way, is Noster. I can post you my Noster. Oops. Did I just lose the stream? Sorry, guys. Everybody hear me fine? Yeah, let me post my Noster in a second. Here's a reminder, if you want a little bit more detail on the central bank money, this chart right here, you go to my website, money supply, top monetary assets, and this is going to show you everything, including gold, including silver. Gold, which is screaming right now, almost to 20 trillion. There's more gold in the ground, there's more gold that has come out of the ground than this. This is gold that has come out of the ground worldwide all time, not including industrial, which is about 15%. So you add about 15, 14% on top of this, you'll get the total gold ounces. It's another billion ounces. But I'm not including that. I'm not including gold that's used in industry, that gets recycled a lot. So I try to use a balance that does not include that. But of course, gold is not nearly as transparent as the Bitcoin blockchain. 19 trillion. So, to me, this is all perfectly predictable. Gold grows at a constant 1.8% per year out of the ground. The price is even faster, closer to 7%. So it's just going to grow. But Bitcoin grows faster than that. So a lot of people, when they think about and they talk about hyper Bitcoinization, they talk about, Bitcoin taking over the world, they often think that it's a collapse of fiat and it's a collapse of gold. I just don't see that at all. I mean, nothing in history has really shown that. Like, it would be bad if we collapsed back to Mesopotamia. But then again, that's bad for Bitcoin too. Yes, I know we can do mesh networks, and Blockstream has rented bandwidth on some satellites. Rented, not their own satellites, but rented bandwidth to broadcast the Bitcoin blockchain. And yes, we could have solar flares, and we could have, if the whole world went back to Mesopotamia, which would be bad for everybody, that still is going to be bad for Bitcoin. So I just don't like the pessimistic arguments of Bitcoin adoption. Let's just look at what we have and grow it from there. Stuart says, do you think there's a chance the craziness of recent times and addition of institutional index BTC funds has obscured the cycle at all? Great question. Gold seems like simultaneously both a smart bet and overpriced. Yeah. Let me pull up gold here. Give it a second. Why is... Anyway, here's gold. Same type chart. '70s, stagflation. Gold screamed. It was $850 for a couple seconds on COMEX. And then down we went for 20 years. And now up again. So, it's a traditional asset. It's assets that central banks understand, and even central banks which are competitive to American and European central banks, i.e. Russia, China, India. It is true that since this day in, November, December, can't remember the exact nadir, but right at the end of 2008, central banks started buying more gold than selling. They were actually selling more. Until then, and now they're buying for the last 17 years. So yeah, huge jump. Best performance ever for gold. And I mean, not ever, but this would probably be best performance ever. But in recent decades, best performance right now for gold. Doubling the 2011 top. The interesting thing about this these evolving trend lines that I show is, you really got to push hard to to buck the trend here. And here we see that even with the action that's happening right now, this is where I like this evolving and the all-time. All-time is here. Evolving is in red. We've been on the same trend. You know, look how these red lines, positive and negative, are equidistant from the, or, you know, relatively at the same trajectory as here in the future. So this market, gold, still, as of this day, is in the same channel. Same channel, same trend line. Nothing really historic happening yet. Could always, but nothing yet. Here were historic changes. Gold has been untethered from fiat currency for the first time ever. So the growth here was way faster than the all-time growth, which is the black. Way faster, way stronger. And then it settled down from the hype. Also, another reason why I don't believe Bitcoin is following that hype is because look at how Bitcoin has settled down into a channel already from 2016. Let's do this. Here we go. So here's some hype for Bitcoin, 2011, 2013. But already from 2016, the past looks like the future. Very important. Yeah. That's my interpretation. This was just a new, and I know I say this a lot, but, the newsletters, the gold bugs, the silver bugs, there's so many people that want to scare you into thinking this time is different. I'm going to try to keep it an MO of my work that I don't want you to always think that this time is different. Just take comfort in the assets that can give you some, if this time really is really bad and, again, I still don't see that, like going back to GDP story. Okay, might be different, but it might be different in that it's just worse than we've had for the last few decades. Maybe we just stay under this trend line of 5.9% growth GDP for 20 more years. Could happen. In that case, there still is an escape hatch asset. Yes, one is gold. But this gold trend line, by the way, I don't have that off. It's 7.3, I think. Hold on. I don't have it offhand, the actual number. Should put it on the chart, but hold on. The slope of the gold trend. Is it really that low? As of February, so it doesn't include the $3,000. Let me make this as of March. Hold on. That's still pretty low. March. So even as of March, yeah, the slope of the trend, it's interesting. The slope of this trend, which goes back to 1971 August, is only 5.1%. 5.1. You can get a number like 7%, I remember now, if you start with $35, all right? So say you started right at the very bottom here and then go to here. Then you'll get something like 8% per year compounded. But I think a better view is the trend. That is the black line. Because, you can buy it, you can sell above it, or you can buy below it, but the trend is your friend, as I say. Yeah. Oh, yeah. So I didn't exactly answer your question about the BTC cycle. What do you mean 20K, 40K before it does? Are you speaking of a new low if it peaks and then goes back down to 20 to 40K? Is that what you mean? Thank you, Stuart. Appreciate it. But this is really the most comfort I think you can gain from a chart. The lower bounds. Yeah, the lower bounds. So, well, the general idea with the lower bounds has been the prior top. Okay, so the prior top in 2017. So let's just look at here. I'm probably telling you something you already know, but you know, the 2017 top, 20,000. It was intraday 20,000. Went down to 3. All right, that was actually higher than the prior top, but people thought that it would maybe go to 1,000. It didn't. It stuck around. I think it went into the 2,000s, maybe intraday. Maybe not actually. I thought it hit 2,000 on some exchanges, but low 3,000s. And then 2021, we had the double top, but then of course, what's the low going to be there? They thought it'd be back to the prior top, and it generally was. We even went below it a little bit because it was kind of 20,000 was the number. So this was actually a more aggressive fall than 2019 versus 2017 top. This went down to 16,000. Okay, which if you look at the intraday back to 2017, it's below it. This FTX debacles, all this stuff was happening here. So I do think that the prior low, and see how we don't even touch my lower bound there. I do think that it's a very safe bet that the next low, 2-3 years from now is 60. 50 would be extreme. But there's nothing in the data to tell me that wouldn't be the case. I mean, to me, it seems a 58K gang, BTC for plebes. 58K could be the number. We see already here the lower bound is 23K. Okay, so we're moving up. And by let's do it out. Let's do it out. So let's assume it's end of 2026. 40K. It's actually lower than I thought it would be. But this lower, it's also another problem with such an extreme move here, is my lower is really pushed by this. It's pushed by this drop. You need to take this off and actually look at this. So the way that I'm, just so you're clear on my bottom lines, people can do them different ways, but mine is based on a multiple. So as the green price moves above or below the dotted black line, which is the evolving line, not the all-time, but the dotted, that's a multiple that I track. And those are normalized multiples. So we can look at, back in 2011, 2015, 2021, they're normalized. We can look at the distribution across any period. This was a very extreme move. And this set the tone for this band here, because it was such an extreme drop. And this was the first Mt. Gox hack, by the way. It's $35. It actually hit $35. Yeah, on June 10th. Then it went down to, a couple bucks. Intraday, it went down to pennies even here. But then so this was like the most extreme buy you could have once Bitcoin had somewhat had a trend. Sideways for a while, and then up again. So it was really figuring out its base here. We see that it hit that bottom again in the crypto window, but it's never hit it again. So my low has been quite extreme. Really from 2019, not really close. COVID, not close. The COVID drop, and even 2022, not close. You do hit the 16.5 percentile. Okay, so that's a better judgment, actually. The dotted blue line. We take that out to end 2026. Look at that, 70,000. Maybe it's 70,000. Yeah, we are late. This comment from Stuart: following the logic and using bookmap order, book heat mapping, the recent low of 76K seemed likely from December, January compared to previous cycles, though the peak here seems late. We could still be surprised, though. I mean, we certainly don't have a 2021 style event, but remember the peak in 2017 didn't happen until December, and the peak in 2013 didn't happen. There was two peaks, actually. There was an initial bump, right? But it was such a fast growing trend that it went, we had two tops here. So went to like 200, 250, then down to 60, and then back to 1300. So, and that's actually interesting. We had the double top in 2013. We had the double top in 2021. Although the 2013 wasn't really a precise, it was a growing, fast growing trend, right? 2021 was unique. 2021 was really a double top. It's interesting. The markets always throw you, right? I thought that this was not a top because it was the same, it's pretty rare to have a double top. So I was convinced this was not a top. And yet it was in November 2021. I think we could be surprised about, maybe something like this again, just a huge boom. You can see we pushed higher here, mid 2017. Again, in August, this was after the, a lot of software uncertainty flushed out of the market here. All right. The SegWit 2X fork was canceled here. Of course, the Bcash, Bitcoin Cash fork started here. And then also the, SegWit itself was activated, and then they did the Bcash fork. And then the SegWit 2X fork was canceled here in November. And then it was like off to the races. So there's a lot of software uncertainty here that was resolved. And it was just a straight up boom. Totally could happen here. I think we could totally see by the end of this year. Let me put what up 1 percentile up for you. By like somewhere here, early 2026. At least 195. The 97.5 percentile I think is too high. Let's just put the trend. Let's take this off so you can see what we're talking about. I personally think you're pretty safe at 1.5x. I think 2x is at least. So the trend is 126K Bitcoin. I think we're blown through the trend by the end of the year, and we're up to 250. I think 250 is a safe bet. But to repeat prior cycles to get a 3.6x, notice how the multiple doesn't change. That's why I like multiples, 3.6x. To get a 3.6x bump on the trend, you have to go back to 2017. It did not hit that in 2021. I still think it's a very exciting time. It's crazy headwinds in the general markets, but in the in the stock markets and the trade markets for the real economy, there's certainly headwinds. But there are tailwinds in the digital asset economy. And finally, to get back to your question here, I actually do think you'll still have it. I just think that's the way that markets work. And I think we'll have it again. I remember people saying that they weren't hoping for crazy booms here. Like they wanted just standard, coders down to work, just strong growth. Of course, they didn't. We're talking about the Bitcoin at that time, and no one was talking about the power curve. I first published a power curve here. Giovanni did it somewhere here. No one was talking about this power trend, but people just wanted a constant, consistent growth. People were saying exponential, whatever, not being so technical on the trend lines. And of course, we just blew through that. We blew through it. There's nothing, in my opinion, that would stop that from happening. Even all the ETF demand would not stop it. Okay, I finally got connected to my BTC Pay. I love that. And you're right. Something again is wrong with my Lightning node. Lightning node is down, so got to check that. You can only do on chain. It will be fixed soon. It will be fixed soon. A delay in peak is feasible given world events and now increasing safe haven demand and Bitcoin store wealth acceptance. Completely agree. It's only gold and Bitcoin. I want to do a chart that sort of shows you the doubling rates. And obviously Bitcoin's doubling rates are insane here. So it's, we double here. Like here, just look at the trend. Just quick example. Like $1, $2, $4 here, $8 here, $16 here. We're many times we doubled in the Bitcoin trend in the last 15 years. Whereas in the gold trend, we've only doubled, well, we've doubled 15 times, something like that, but not nearly as many as the Bitcoin trend. So the trend, $132, gets to 260. That's one doubling. Wait, did I do that? Did I say that right? Not even less than. We can count them. So it's 5% growth, rule of 72. Yeah, it should be something like 9, actually. 8, 9 doublings. I don't know why I said 15. 131. Here's 260. That's one doubling for gold in the trend. Took 14 years. One doubling. Now let's go to, we need to go to 520. 2 doublings. 1,040. 3 doublings. And 2,000 and change. Yeah, 4 doublings actually at the current rate. So it's very, very slow. Only 4 doublings for gold over the last 55 years. But then think about the next 20 years. You're only going to get another, 1 or 2 more doublings, right? For gold. Depends on it's always going to depend on your growth rate. People have different growth rates than me. Maybe you want to start your trend line here, so you'd have a way faster black line. Like you can see that my black line is not, if we started my data cherry picking here, then you get a faster trend line. Peter Schiff would like doing that. I like to do a long-term trend line and just accept it. Let me get you my Noster. money printer go burn. Go burr and burn soon. Yes. It's a real battle now for primacy in fiat assets. Trade is not a zero-sum game, but it's becoming more of a zero-sum game, right? We're deliberately trying to harm some people's bottom lines and to improve our own. And I'm not even trying to put a value judgment on that. It's just things are changing. This is a no bullshit detector, though. It really is. The 10-year. Hold on. I'll find you the. Here you go. BTC for plebes. Finally. There's my NPub. And you can donate there as well. I should have liquidity on that wallet. Is Elon still taking down accounts if you put like Noster in your Twitter handle? Probably. I don't know. All right, so that was about all I wanted to show today. Just an update on trend lines, Dollar terms of money, 10.2%. GDP. Honestly, this is an interesting one. I could see this. I could see us staying under this for a few decades. GDP 5.9% per year. Stocks 7. With dividends 9. And Bitcoin 45% is here. But 45% in declining, but declining very, very, very slowly. So it's almost like, it's the Michael Saylor, there is no second best. Why would you even worry about and if you want to time markets or whatever, just for a little extra returns, you can certainly do that in Bitcoin. Just look at the trend line. Buy under trend, sell above trend. All right. The time to do that, of course, was here. Peter Zion was saying Bitcoin was $17,000 overvalued at $16,000 per Bitcoin, and Joe Rogan. But still, we're under trend, so theoretically undervalued. If you accept the Bitcoin power curve thesis. So you can still sort of ape in and ape out into Bitcoin if you want. But I do think that that's obviously more risky than just the buy and hold, and it's certainly more risky than shitcoining. Yeah, Zion is just terrible with Bitcoin. Not an uneducated person, right? I don't think he's uneducated. I do tend to agree with his assessments of Russian threats, obviously, living here in Eastern Europe, but he's clearly uneducated about the network and the nature of what Bitcoin can do and what this represents. You guys want to see any other charts? Got some trading view stuff too, obviously. Here's another one. It's a good one. It's a precious metals. Yeah, like commodities. Let's say gold, silver, Oh no, I don't have Bitcoin there. Actually, I got to get out of that. Let's go to this list. Okay, gold, Bitcoin, S&P, and the dollar index even. So here, higher is better. Higher is better. Not always with these charts with currencies and stuff, but here, higher is better. So gold is well outperforming Bitcoin in the last 3 months. Well outperforming. Yeah, Stuart says demographics good, geopolitics overseas not so good. Let me get to your question there, Stuart, in a second. Let's just look at this really quick just to remind. So stretch it back a year. Bitcoin's catching up to gold. S&P only 6.8%. The Dixie, the dollar index, down. And then 5 years, we just blow it out. It's unbelievable. There's no way this changes. There's no way. Based on the trend, based on the power curve, I just don't see it. This might not make any sense. Yeah, entire range. Obviously, the multiples are insane here, but Bitcoin is the king. So Stuart, no, it's fine, Stuart. Stuart asks an interesting question. Let's take it back here to the 10-year. Do you think the whole rebuilding the economic order thing, Bretton Woods 3.0, can threaten BTC? I don't. You know, I have my short-term interests, obviously. I'm not even worried about government spending in the short term because we have such a threat from the East to Europe, and Europe needs to spend more. It's fine if America spends less. Europe needs to spend more. But that's going to happen. Those things are going to happen. It's just going to happen, and we're going to stay in this fiat world, and we're going to stay in this world of borrowing money to fund things like defense. It's just real world stuff. I don't see it changing. I don't see that changing at all. As well, Bitcoin is so huge now at, approaching 2 trillion against it's 1.7 or whatever trillion. But it's so huge at this point that I don't think you could ignore it if you tried to reset with a Bretton Woods 3.0. If you brought back gold, how could you bring back gold and not bring back Bitcoin as a part of it? And then I would say the final thing is, even if you only did a dollar gold or gold dollar system again to try to reinstill some faith in the dollar, and you kept Bitcoin out of it, Bitcoin again would still excel there because it's a network that no one can censor. And I think everybody, as dark as the United States is at this point with a lot of their policies, as far as being open to Europe and open markets, there's tailwinds. There's tailwinds there for Bitcoin. So we're not looking at that scenario. People were celebrating the sovereign wealth fund and the strategic Bitcoin reserve announcement, both of which are going to hold Bitcoin eventually in the United States. I think that's a fair assumption. Certainly the strategic reserve by definition. That's an elimination of that threat from the United States, at least. Could that be turned around in 4 years if there's even elections in the U.S. in 4 years? Could that be turned around? Yes, it could be turned around, but I just don't. I think Bitcoin is past all those geopolitical threats. Everybody just sees it for what it is. They've been trying to stop it for 15, 16 years now. I don't see it as a threat at all. And then to go back to your other question, I really don't see it as giving up on this curve and even giving up on these booms. Yeah, that's obviously a thing. The stablecoin legislation is coming. They want stablecoins to boost this, right, to make this fall. price rise or the bond yield fall. That's what they want stablecoins for. Lutnick, of course, is, I mean, you can't get a better cheerleader for stablecoins than Lutnick being the Secretary of Commerce. But it's small. Let me open up my my good old CB chart. I meant to update this actually. And I meant to update this and put in the American holdings of it, but here we go. Yeah, no, I agree with you. I agree with you. It's true. That's what they want. It's not going to be easy for them, but that's what they're going to try to do it. And as I've made the point now many times, do Americans want to hold treasuries? Well, as long as they're yielding enough percentage return against inflation, they will want to hold treasuries, and that's being tested at the moment. Okay, so here's up until March. We got the Federal Reserve. Let's take off. The holdings are in green, the actual $6.4 trillion. $6.4 trillion, right? That's the actual treasuries that the Federal Reserve owns out of $36.2 trillion in debt. Let's take that off just so you see the percentages. Central bank is down to 17.8%, and foreigners are down from 35 to 23. So we're at 40. I need to put a third percentage, which is just Americans, non-Fed Americans. All right, that's the difference here. So 60%, which is a number you would see if I put that line on the chart, it would be rising. That will have to grow even more to keep the debt game going. It is true, though. The stablecoin idea is a bucket of value that could buy more treasuries, and it's kind of a foreigner. Like if we could count that up, I would put it in the foreigner bucket, even though it's a drop in the bucket right now, right? Stablecoin, Tether is $140 billion market cap. They want to put trillions of treasuries into Tether, and they could. But I think what you would see is treasuries leave money market funds. They would leave Eurodollar accounts. So I'm not sure that that's like really, a vehicle to extend the national debt. I think it's just transferring the national debt from one entity to another. It's possible that it sort of supercharges it for a couple of years because people think that stablecoins are better to hold than money market funds. And they are. I mean, you can do more with a stablecoin than you can do with a money market fund. Absolutely true. That's absolutely true. I don't see it as a game changer to change this trajectory of how the debt grows. What is the supplementary leverage ratio at the moment? Let me do a quick search. Must maintain 5. Right, 2% enhanced buffer on this 3% minimum. So this is, capital stuff. Basel III. So it's 5%. It was 3%, but now they have to have a 2% buffer. for the 8 systemic banks in the US. And if that is, if stablecoins are included in that, of course, that will add to it. But it's small, and even Bitcoin's small. Another chart that I want to do here is, so what you see here is it's who holds the asset, and in this case, the asset is the debt, the United States debt, the 36 trillion. So this is who holds it, right? The central bank, the Fed, and foreigners. And I should have a third line, which I'm going to do for the next video, which shows you Americans, just American holdings, pension funds, whatever. These are holders of the asset. But another interesting way to look at this would be how strong is that asset with real wealth? And for that, you would do the market value of gold. Of course, it's a big question mark if that gold is even there. But you do the market value of gold that the Fed holds and the Treasury. Treasury has a little bit of gold, not much. So the Fed plus Treasury gold divided by the national debt and the value of their Bitcoin. So that would be another way. And I've been thinking about that chart because I haven't put it together long term, but that would be another way to judge the quality of the U.S. debt. And without a doubt, 100%, no matter what anybody says on the left or whatever, anti-Trump people, that will help the dollar. I mean, if Bitcoin, from that view of how many assets back that debt, that could 100% help the dollar. It could be the best move Trump has ever made and will make. If Bitcoin, because remember, you go out, of course, we're hoping that the Constitution is, at least I'm hoping the Constitution is followed by 2028, but you're out, the power curve is $300,000 Bitcoin. Okay. Do I need to do the power curve on the market cap myself? Whatever. We're already at 6-7 trillion with new coins. 5-6, right? 5 trillion here. And if they do not increase the debt so much, then you're looking at a meaningful ratio in 4 or 5 years. 5 trillion divided by 36 trillion. That's a huge amount of coverage short term for the debt with real wealth. By the way, the gold holdings are very small, even marked to market. Marked to statutory, which is like $42 an ounce. They're nothing. But marked to market, it's like only 800 billion, something like that. 800 billion is what the U.S. holds in gold, assuming they have that gold. So I don't know if I'm answering about this BTC, but if you want to, I think leverage and systemic risk is more under control now in the United States. It's always actually been under control in Europe. If anything, it's getting more out of control in Europe because they want to take more debt. But of course, leverage, terrible assets backing your loan portfolio, that was the hallmark of 2008. The problem is we papered over those losses with this. Right? This was the papering over of those losses in the United States. Just huge portions of zombie mortgage-backed securities are inside here. That was the problem. But as far as banks taking too much risk to make loans, I actually think that's somewhat under control. even if they add more capital buffers and you have to buy more treasuries or stable coins as an asset to offset your loans. I don't actually see that as a huge problem. The big thing, as Ray Dalio went on Meet the Press last weekend, it's currency. It's the value of the currency at this point. Yeah. There's a good one from Stuart. Makes sense that BTC does well regardless and is leveraged but not corrupted by institutions with or without any large-scale fiat financial reset. Yes, the Fed's hands are completely tied, as BTC says. And they are probably at some point more susceptible to the whims of Donald Trump than other times. Whoops, here we go. So printing money would mean this going back up, and we can clearly see that the rate of decline is slowing. Question of is it going to be like this, or maybe like this? It's going to turn around, and Trump wants low interest rates. He does not want this to happen, where this would keep going up. There's one from Stuart. Money and Macro did a good job of steel manning the administration's objectives, covered the potential objective of devaluation for reindustrialization with some interesting offset strategies. What are the offset strategies that you're seeing? I get the point that that this is bringing onshoring more industrial capacity in America, which is a good idea, 100% good idea. I get the point of taxing trading partners more to do that. Another offset strategy is the Bitcoin strategic reserve. Yeah, the cure for inflation is always more inflation. Yeah. So the question for Trump, so strategic reserve, correct. Stablecoin bond demand, correct. I wonder about this, though. This is what Trump wants this way lower, way lower. He was already saying this was too high when he was out of office. And you remember Powell was really getting the screws on by the pro-Trump journalists when Trump was talking about how he wanted interest rates lower. All through this period, running up to all through this period. All through this period, running up to his inauguration. Yeah, right here. And Powell was saying, you know, the administration has no authority over the dollar, which is true. That is technically true. The Federal Reserve is independent. I'm not defending them, but it is technically true. And then a lot of the Trump, you know, Doge things were good for yields here. And the very interesting fall, but then spike back up. The opposite of what Besant wants to see. So as long as this can go down, you know, like I said, it's not unheard of. We're still at the levels that we've been at pre-Liberation Day, and we're not even at the levels when Trump was really complaining here, getting close to 5%. The jury's out, though. Honestly, the jury is out. You know, I'm hearing that the European Union, so the European Union is a powerful bloc. That's one of the good things about the European Union is they negotiate trade as a bloc. That's a stalwart thing of the European Union. And so they're looking out for everybody's interests. I know that there's even controversies about some European members being shafted more than others on trade, but regardless, as a bloc, that's a main feature of the European Union. And I'm hearing, you know, again, it's just news, but I'm hearing that the talks are not going well between the European Union and Americans. This 20% reciprocal tariff, as it's being called, is at least one of many things that Trump wants to change about trade with Europe. So will the markets see that as good for the dollar long term? I have to see. The strange thing is that, and I really do think that, you know, I personally don't think the plan hasn't been that thought out. I do agree with the people that say that the reciprocal tariffs look like they were made from ChatGPT. Of course, we know the formula, but the way that it was applied to certain nations and not others, and you know, the penguin tariffs and all that. It reminds me of when Trump in February had the call with Putin. He just decided that he wanted to try to get a fast peace with Putin directly. And then ever since that February call, he's been appeasing Putin. Interestingly, the 10-year has agreed with that. Well, I shouldn't say anything about it. Who knows war strategy versus what he's talking to the Fed on the side. But regardless, markets were not disputing that. We all here in Europe were disputing that, but the markets weren't. That war still goes on. That hasn't been solved. It reminds me of that. The tariff conversation reminds me of that. It's just Trump trying to pick up the phone, do a real estate deal with Putin is the same thing as what he's trying to do with the tariffs. And the thing that Rahm Emanuel has been saying over the last couple of weeks, I have to say it makes perfect sense to me. It's that the U.S. had amazing goodwill in the international trade world because of what the U.S. has done for the last 80 years. And China had tremendous badwill because of the manufacturing jobs that they were taking, not only from America, but from Africa, from Latin America. I shouldn't say Africa, obviously it's tougher economies there, but China has moved into Africa in a big way, but they've also taken manufacturing jobs from Latin America. And that was a big thing. People, you know, it was not just the United States that was upset with some offshoring of manufacturing jobs. Again, I'm not defending it one way or the other. I'm just saying. And from all of that goodwill that the U.S. had, this move, which started here, which was fully announced here, is a net negative. So, not saying it's over, not saying that they won't calibrate and reformulate the plan, but it was 4.2 on Liberation Day, and Originally got better and then quickly got worse. So now it's 4.3. Again, I never looked at the Treasury market as much as I did here because I really do think this is something interesting. And like you guys have been saying, this is a great reset. It could be a great reset in macro. But the U.S. does not have the goodwill. And European Union is still a strong, powerful bloc. I showed you the investment in U.S. assets. Let's put that up again. I think it's a good one. I'll leave the 10-year on as I find this. All right. You know, this is mostly Europe, mostly the EU, but just to show sort of security blocks, right? Main investors in U.S. assets. The BRICS are not investing in America. Japan has increased it a little bit over the last 10 years, but it's really Europe that holds a lot of U.S. finance. And this is not just government bonds. This is not just the 10-year that foreigners hold. This is all government bonds that foreigners own, all corporate bonds that foreigners own, and all corporate equities. It's a big number, $14 trillion that NATO, non-U.S. NATO members hold. Yeah. That is the gambit. So let me put this up. This is a good point. What Trump knows and everyone else is learning, though, U.S. is really the only game in town. Example, the EU can't handle China dumping and will also raise tariffs. China's overtures to Australia. Asia will fail. I take that point. I take the point. Again, I can just speak to my lens of a European, Eastern European sort of concerned citizen. The elephant in the room remains for us. It remains Article 5. And if Russia would try to test Latvia, Lithuania, or Estonia, it literally comes down to our small countries. And maybe it sounds a little bit self-centered, but most people in Eastern Europe at the moment think Article 5, which is, again, this is an 80-year security guarantee. You think Article 5 is hanging like almost a dead letter, almost about to fall off. And if a move is made and the Americans say we're not going to act on it, then that is the full death knell of NATO. I think that also hurts the credibility of the United States. Yes, Europe, specifically Western Europe, is terrible at recognizing that threat and hasn't paid. But I there's a lot of moving parts, right? People talk about if this multipolar world, is it really a Trump, Putin, Xi trifecta? That seems to be what Trump wants. But then, of course, there are other players. Europe needs to be strong again and step in as a major player. It is bad for the U.S. vision, and I'd say it's bad for the European vision, by the way, is if the Europeans say, okay, we'll make up the shortfall with America to the Chinese. They say that's bad for European security. So that's true. That's bad for European security if Europe tries to make up the American shortfall with the Chinese. Maybe we could try to do it with non-military goods, but it's complicated. It's a complicated world there. And Europe is in a bad place. I agree. I absolutely would say that we're not the apex predator for sure anymore. Haven't been for 80 years. No European country. But there will be consequences with turning away from that supremacy. That's why I think this could have no, actually not so much this. This is always going to grow. This does not look good. Not look good. Under trend. Yeah, it is the gambit. It is the gambit he's working on. Unfortunately, we're the guinea pigs. We are the guinea pigs because if there's going to be military exercises this summer in Belarus, and if there was ever a time to test Article 5, in my opinion, it's coming up. The counter argument is Trump does not want an Afghanistan like scenario like happened to Biden happened to him. So either a full war with the Baltics or a partial war, hybrid war that's literally broken out Russian troops across the border, whether it's in Suwalki or in Estonia or Finland. That is a threat. And there's two ways to look at it. Again, one is Trump washes his hands of it and say, hey, this is what I said all the time anyway. You guys don't pay. But then the other side is we do pay, actually. In Eastern Europe, this is a threat we've always been keenly acute to. So we have, although we are small in size, all of the Baltics, Poland, the NATO budgets are very small contributions, Eastern Europe versus Western, still because we're smaller economies. If he says no, if he says I'm not going to defend, if he says I'm going to let my buddy Vlad do what he needs to do, I see again a loss of dollar supremacy there, a loss of United States credibility. He may very well want to do it, Trump, that is not defend. He may, it's a question of does he want that Afghanistan-like moment of chaos occurring? And I hope it doesn't happen. I hope all the behind the scenes talk doesn't let anything like that even come close with Europeans. But if Americans really do step back, and they have every right to step back, then the Europeans have to step up and have to contain the situation. But God, I tell you, the Ukrainians, man, the Ukrainians are just pissed. They have been fighting for 3 years. Yeah. Yeah. Also, the funny thing is that they said, the Americans have been saying, all right, we're glad that you're spending now, but you still are going to buy American, right? And then there's these, the Portuguese and the Danish, I guess, have scrapped their F-35 programs. Others might do more, even Germany, because they're worried about that infamous kill switch that Washington could literally affect NATO kit, NATO planes and artillery and rocket launchers and all the rest. So that's a thing. Yeah, boots on the ground will support, but it's your boots on the ground is what Stewart says there. It's another good one. Hard to know what in the news is creating leverage through narrative. As always, I do like to keep with the the charts, and if you look at Forex, oops, I spilled my water there. Sorry for the silence. Let's go back here. Let's just show this. So dollar, euro, dollar, ruble. Here, down is better. Down is better. And, you can see Russia was really hurting here. Just before the election, and then Trump is actually, it's actually been quite good for them. It's incredible to me. This chart is incredible. Oh, actually, it's both. Sorry, I mixed it. Let me. Sorry. This is what you want to see. This is what you want to see. Sorry. Down is better now for both. I had them mixed. Are you in Australia, Stuart? There's the AUD. Dollar down against everything. Good day, sir. So, but this is just incredible to me. The recovery from the ruble that Trump gave Putin. So it's like this was the phone call right here, if I recall, somewhere around here. Just let's give it a run. Trump says with the personal relationships and even though the Russian economy is really hurting from the lower oil price, so far their ruble is doing better than it had. Let's take it back 5 years. Still, Aussie dollar flat, European euro better, 4% better than the dollar. Ruble, 11% worse. Then we go they're all worse than the dollar. If you stretch it back far enough, and you can see how bad the ruble typically is. Again, this is after the invasion of Ukraine the first time, right there. Oop. So Putin has hardly been good for his people, currency-wise, casualty-wise. But we'll have to see. Let's see. I think I'm spent, guys, on my charts for the day. This is what I just wanted to show you. Trend lines again. Keep focused with the big picture. 10.2%, 5.9%, 7.3%, 9.3%, 45%, 42% this year. And if you want to see the rest of that, you can go to this page under charts, which I only have one chart still, which is the power trend. Had more charts on my old site, but don't have it yet. You go here, you can see the trend growth rate. All right, so last year we finished up at 45%, moving down this year to 42%, 39, 36, 34. Like I said, it's going to take 100 years even. 100 years to get to 10%. This compression here decreases as the time increases. And I will leave it there for you. This is your target for Bitcoin 2024. Percent wise on the power trend, there's your 125,000 price. Go ahead and use this for a little guide. Thank you, Stuart. No spamming at all for many of you guys. I really appreciate the comments always, and happy chatting. Good evening to you. Good evening to you, and good day to my European friends. Take care, guys.